Good morning and welcome. Moss Adams is pleased to present today's webcast, Growing Your Not-for-Profit Financial Literacy, to members of Southern California grantmakers and Northern California grantmakers. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Good morning and welcome. I'm Cameron Green, Vice President of Professional Learning and Family Philanthropy at Southern California Grantmakers. On behalf of our colleagues at Northern California Grantmakers, we are so thrilled to partner once more with Moss Adams and their incredible team for another session. We are grateful for this opportunity, and we hope that you all enjoy today's presentation. Thank you.
Thank you, Cameron. Now I'm pleased to introduce today's presenters from Moss Adams, Melissa Harman, partner, and Matt Parsons, partner. With that, I'll turn it over to Melissa to get us started.
Thank you, Danielle. We really appreciate it. Well, welcome, everybody. Good morning. We're delighted to be here with you today to go through growing your not-for-profit financial literacy. Just to set up the agenda and the tone for the meeting, this really is a session for going through a bit of accounting for non-accountants. So those of you on here that are in-depth accountants, we hope you're here for the CPE or just a little refresher, but this really is targeted at educating an audience that doesn't normally go through not-for-profit financial statements or is trying to increase their literacy on some of those red flags you would see as you go through your grant making and assessment of not-for-profit organizations. We're going to cover today a little bit about what is a not-for-profit organization and the variety that are out there and what makes something unique. We're going to go through some of the financial statements on a not-for-profit, key terms, unique items, as well as some 990 literacy that's included. We do have some ratios that we think are really important when you're evaluating or looking at not-for-profit financial statements that we'll cover at the end. We did include it there. Should we not get through everything, it is some takeaway information, but we do plan to cover those at a high level. Those are ratios that the rating agencies use, and we think if it's important for them, it's important for you to take a look at those as well. Feel free as we go through this session, make sure you do ask questions. We'll try to get through those, and whatever we can't cover during the session today, we will absolutely get back to you after this session. We thought we'd start out with trying to figure out who's on the call today with us today and really understanding the level of literacy of financial statements for a not-for-profit. So want to know who's a pro and who's just here for a refresher. I do them all the time. I'm seeing financials every day. Who's reading them on a regular basis but couldn't put them together and maybe understand some of the terms. You've seen some of them, one or two, read some, or what is a financial statement. So really wanting to see, make sure that you answer the polls. If you want CPE credit, we'd love to kind of get an assessment of who's out there today, what you're interested, what your level of understanding is, so that Matt and I can set the tone in how we cover some of the upcoming slides. And I see we have about 40% of attendees.
I was just going to ask you, when did you feel like you finally hit that pro status in prepping them all the time?
I'm still working on it, Matt.
Same.
Still working on it. I always find new nuggets of how to present it or different users. I mean, I think that's the thing, too. Financial statements are not static, and it depends on who the users of the financial statements are. So I feel like it always is changing.
For sure.
I still see some folks coming in. Great. All right. That's exactly what we thought. So that is perfect and exactly the audience we were looking for. So most of you have read them and somewhat understand them, some with very few and some with a greater understanding. So we'll cover it with that kind of moderate understanding in mind as we go through some of that. So with that said, I'm going to let Mac walk through kind of the background on a not-for-profit, and then we'll dive into some of the financial statements here in a minute.
Thanks so much, Melissa. Yeah, those poll results were interesting. You know, I hope everyone today understands what a not-for-profit organization is, but I think, you know, it can get confusing to understand just all the different rules and regulations and what applies to what type of organization. So we're going to dive into a little bit of those details, hopefully unlock some of those mysteries for you. So when we think about a not-for-profit organization, you know, not all these characteristics may apply to every single one. For example, you know, the traditional nonprofits that we think about receive contributions, you know, either from the public or from, you know, a private donor for a private foundation. But certainly many organizations don't, like associations or even think of some higher education where primary revenue is really coming from tuition. Some social welfare organizations are the ones we typically see in that contribution space. But some of the other characteristics that I think are really helpful to know is that generally their operating purpose is really not to provide goods and services at a profit. Now, of course, we know not-for-profits wouldn't exist if they're not, you know, earning some return on what they're investing into the space, but that's just not their general purpose as their initial setup. And I think that really goes down to this third bullet point, right? So there's not an owner, there's not anyone receiving dividends or draws from the organization. Really, those profits or gains are going to be reinvested into the programs themselves and used for future programs. All not-for-profits are exempt under the 501 section of the IRS code, and we'll talk a little bit more about what that means and give some perspective again on the different types. I really like this snapshot. It gives a really high overview of just all the different entities within the space. So when we think about not-for-profits, right, they're different from, you know, this for-profit partnerships, corporations, LLCs, trusts. And when we think about tax-exempt or non-exempt, those are, you know, really two different statuses. So, you know, a nonprofit that incorporates under state law is technically a nonprofit, but it's not until they get a tax-exempt status under the IRS code that they truly are considered to be tax-exempt. Now, we know many organizations that are tax-exempt still pay some form of tax. We'll talk a little bit more about what that is, unrelated business income tax. But under that arm, we have two separate categories. We have our kind of our standard charitable organizations that we think about, and then the non-charitable organizations, which are, you know, credit union, business associations, yes, even cemeteries, and those tend to be the non-501c3 organizations within under IRS code, whether they be a C4, a C5, a C6, or a C7. Under charitable organizations, we have what we think of as public charities and private foundations. So private foundations have two different wings. They have operating and non-operating. Most private foundations that we think about today are under that non-operating space. It's actually kind of rare to have an operating private foundation. There are a number of tests that the IRS requires in order to meet that status, and typically someone might be an operating private foundation if they fall into that category because as a public charity they no longer meet some of their characteristics or they're not getting enough outside support from other donors or other contributions. And then there's the public charity space. We have, three different categories. We have definitional, publicly supported, and support organizations. And public supported are those that, again, tend to derive most of their contributions from either a government space through a contract or a grant or through contributions. And then support organizations tend to be those entities that help, again, what they're saying just in the name, support and their type of public charity. So a community foundation often has support organizations that have been set up to specifically raise funds to help, again, support the overall mission, but they might be governed by separate rules or have major contributors that put their resources into that public charity. All right. So now we're going to go a little bit into the format of the financial statements of a not-for-profit and sort of just think through, what are the differences that you might see when looking at a set of financial statements. But, first we just thought we'd start off with this kind of general question, true or false, no one actually reads a not-for-profit's financial statements or 990, and we didn't even give you the option to respond because we know, of course, that that's false. The really one interesting aspect of not-for-profits is that so much of the information does become public, either because it's required by, your state attorney general's office. Again, 990s are publicly posted everywhere in different forms to, again, really give, especially those donors or granting agencies the ability to do exactly what we're doing here today, and is researching their financials, understanding their programs. There's only so much that can come out through a review of their website. There's a lot of great information, of course, that the IRS requires or the state requires, and that all comes through the compliance aspect of posting this information to the public. So I just thought I'd briefly talk about the differences in types of financial statements because they do get confusing, and it's important if you are reviewing a set that you know the difference of what you're looking at. So an audit is, again, what you'd expect. There's been some form of in-depth testing done of the underlying transactions, which the auditor has expressed an opinion saying that, yes, the information in this report is materially correct. Now, material is kind of a confusing element, and just the easiest way I think about it is they're not looking at every transaction, right? They're really setting a scope of what they think would be the most important information to that reader and setting different benchmarks to test that those balances are being reported in accordance, with that materiality threshold. A review set of financial statements is different. There's not an opinion that's expressed. It's very much a higher level analytical type procedures that are being done. For example, comparing year-over-year revenues and expenses, looking at, what are those trends within the industry that, might give rise to a material difference when looking at them. And so it's important when you see a report that comes from an accountant that you're looking for, what is that first page? What is the accountant trying to tell me? Has an audit been done or a review? And then lastly, a compilation is even less than that. Really, it's just the nonprofit organization has engaged an accountant to really put their financial statements together. So it has some semblance. It meets the general standards under U.S. generally accepted accounting principles. But there really hasn't been any kind of in-depth analysis that the accountant is attesting to say, yep, these are materially correct in any shape or form. So again, just really important that you know what you're looking at. So then you might be asking, yourself, like, well, why would a non-for-profit put a statement of financial statements together? And there's a lot of different reasons. The one I think about most often would be creditors or potential creditors. That would be, for example, like a bank, if they've made a loan or provided a line of credit to an organization. Just like any other formal business, they want to make sure that there are policies and procedures in place to protect those assets that they've given to them. And so that's where we see a lot of different, initial organizations putting together their first set of financial statements. Again, funding resources and contributors, I know a number of you are grant-making organizations. You probably expect, before you make a gift or a grant to an organization that, you've have something to back up before you make a decision about giving them resources. And so that's another reason where we frequently see. But in those cases, both under funding sources, but both contributors and creditors often will accept either an audit or review depending on their purpose. It really gets to be those regulatory agencies and different funders that come from the government that expect to see a true audit taking place. And so, for example, if a not-for-profit receives and expends more than $750,000 in a given year with federal grants, they're required by law to have a single audit. And according to that single audit, there's also a financial statement requirement as well, so that the auditor has to basically attest to the correlation between what they're reporting and expenses and compliance back to a set of financial statements. And then, oftentimes the governing board, the board is really the one responsible for making sure that the financial statements are clear and accurate, and that they're responsible for the overall health of the well-being of the not-for-profit. And so many of my clients are really driven by their governing board, just requiring that because they want to be able to do their own due diligence and just ensure that there are these policies and procedures in place that will protect them as well. So we're going to dive a little bit into some distinctions between not-for-profits and for-profit financial statements. How are they similar? How are they different? We picked the American Red Cross. We could have picked 1,000 different organizations to choose from, but it's just, I think, really interesting, especially with today's day and age, to see what they've been doing and some of the different reporting requirements they've been working through. First, I just want to talk about some of the similarities. So, of course, when you get a set of financial statements, you're going to, again, look for that report by either the auditors or accountants. It's going to tell you, again, the opinion that they've expressed, if there's any matters of emphasis. For example, there's specific footnotes that they think, as a reader, you want to draw your attention to first. If there's any supplementary information that might be accompanying the report, that'll be helpful for you as a user of the financial statement. And again, another thing might be if the entity's not performing well, and if there's a risk that they might not continue past 1 year of operations, usually the auditor will also make that mention in the financial statements. And that's true for both a for-profit or a not-for-profit. The very first page tends to be your balance sheet, which again is going to be very similar, where you have assets that equal your liabilities and net assets. That's always the first thing I do when I look at those financial statements is, hey, do these agree in total between these two different amounts? And it really again tells you that that net asset category, sort of the health of the organization in terms of how much reserves they have and the ability to, again, the difference between what their current obligations are and what resources they have on hand to continue forth the efforts of the not-for-profit. Many of the accounts are very similar, so they're going to have cash, investments, receivables. Obviously, of course, with a not-for-profit, contributions receivable is going to be unique that you wouldn't see traditionally in a for-profit organization. And those are, of course, gifts that have been committed to by third parties to really continue to fund the organization. Inventory, a lot of our not-for-profits, you think about the food banks, you think about, of course, here, the American Red Cross, different associations, they're going to have large inventory balances on hand, and those can either be just used for general operations or potentially sold as another line of business. We've heard a lot of discussion about leases, and some general changes have been talked about related to that. And so this organization, American Red Cross, has already adopted that, and it's very similar to our for-profit counterparts, where now obligations for future leases are going to be reported as both an asset and a liability on the financial statement. So that's another correlation that you'll see, depending on the type of entity that you're looking at. So, how are the differences? Where do these occur? A lot of them have to do with the statement names. I'm going to go ahead real quickly one slide and then come back to it. But this is, I think, it's a great visual of maybe what you see in a for-profit entity different from what you would see in a not-for-profit. So, what a for-profit would consider the balance sheet, in a not-for-profit world, we call it a statement of financial position. And really that is just, again, to tell you, the reader, where are we at financially? Of course, it still has to balance, but that's just how the not-for-profit rules have labeled that statement. Similarly, in a for-profit entity, you'd see maybe an income statement or a statement of revenues, expenses, and changes. And in not-for-profit, we call that a statement of activities because, again, it's just giving a general overview of, what those activities have been. It's not necessarily, again, driving towards a profit. Both entities are required to have a statement of cash flows. And the functional expenses, though, is one thing that's really unique to not-for-profits, and we'll talk a little bit more about that in depth a little bit later. But I just want to go back here real quick and sort of talk about some other general differences that you'd see. So it's required that if there are any contributions that have donor restrictions associated with them, that they are reported in a separate column in the financial statement or in a separate section so you can really trace through what those activities are, what are those new resources that are available, and then what have become available during the year through these net asset releases, which we'll talk a little bit about later. Again, contributions, one thing I just want to make sure is important is that there's not an exchange related to them. There's no reciprocal type of, I'll provide you with this gift if you give me this in return. Those typically are other forms of revenue, and they do require different revenue recognition requirements in line with other for-business entities, for-profit entities. Great. All right, and I think we have our next polling question.
We do. Perfect. We're just really going to set it up for our deeper dive into, oh, geez, I think I goofed that up. I'm so sorry. Deeper dive into understanding restrictions, understanding financial statements, understanding the liquidity of a not-for-profit organization when you're looking at the financial statements and some of those pieces. So the question we have to really just set you up, and we'll dive into this a little bit more, is which of the following is restricted by the donor? Is it the board-designated endowment fund? Is it a board-designated capital fund? Is it a donor-advised fund or an endowment fund? And I don't know, Danielle, if I goofed it up by advancing too far. Did I goof up the slides? No? Okay, it looks like we're getting folks coming in on this. So I think it's really interesting as we set up understanding, and I know most of you are in grant-making organizations looking at funding not-for-profits and really understanding the health of their financial statement and understanding what of their net assets they could spend and trying to understand what their true need is. I think it's the importance of understanding the restrictions surrounding this and what can or cannot be used specifically. So we'll give it a few more minutes. I know we're trying to leave the polls open for a minute, and so everybody can get CPE credit if you want, and otherwise just trying to get an assessment of the level of understanding on what is a restriction. Danielle, just let me know. Okay, perfect. So the answer is actually D. And we'll go through some of that. So the answer is D. An endowment fund is actually the only one in here that is restricted by the donor. Technically, a donor advised fund is unrestricted, and we can walk through some of that. It is under the advisement of a donor, but not restricted by a donor. And we'll go through what some of that means when you're really looking at financial statements. And it doesn't really change what is liquid or not liquid and what you can or can't use. So I think the important thing when you're looking at, as Matt said, the statement of financial position, that really shows the assets and the liabilities of the organization and the type of net assets. And there are two types of net assets. Those are those net assets that come in without donor restriction. So the organization gets a contribution, they get grants, they get exchange type revenue, that has no restriction. They can spend the money on whatever they want. So when you're looking at a not-for-profit's financial statement, you're trying to understand the accessibility to the leftover funds that exist, then that would be those net assets without donor restrictions could be spent on operations. From time to time, we will see boards of not-for-profit organizations restrict certain net assets. Sometimes it's for their own operating reserves. Sometimes it's for an endowment. Sometimes it could be just for a capital project. Those are, I said restricted, they are designated. Only a donor can restrict funds. A board or a not-for-profit organization itself cannot. The donor is king or queen, and the board itself can only designate them. They cannot restrict them. So technically, they could be spent. So I think that's something you need to know. There is, so long as there's a resolution to undesignate those, the organization can spend those. With donor restrictions, pretty simple. It is net assets that were given to a not-for-profit organization with either a time or a purpose restriction. I have to spend it in a certain time. I have to spend it on a certain purpose. It could be an endowment. It has to be held in perpetuity, and the income from that endowment can only be spent on certain things. And or it could be basically some sort of contribution receivable where it's inherently time restricted because we have not received the money. So anyway, so that is fine with that. So I'll move on a bit and go through. On the statement of activities, it is also organized by restriction, so you'll see that. But the statement of activities is essentially the income statement. It works through what is revenues, generally for not-for-profit contributions, grants, sometimes exchange revenue. What are expenses, and those are shown functionally, and we'll cover that in a minute. And ultimately, the change in net assets or the profit or the loss of the organization. So that's what the statement of activities and the operations show specifically on that. It is required to be presented by restriction. So what revenue did you receive that has a donor restriction or doesn't have a donor restriction? So that column is required to be shown. No, all expenses are always without donor restriction because you've already spent the money and released the restriction, and just a little bit of nuances as it relates to that. As Matt said, we did pick the American Red Cross as an example. They have all of the things and components that are unique to a not-for-profit. So when I teach this at other sessions, it's always one I like to pick. So when we're really looking at those and those things that are really unique to a not-for-profit, in the statement of financial position, some of those things that we talked about, the contributions receivable, it's something that is unique to a not-for-profit. When you're assessing the not-for-profit financial statement, this is about the location that it will sit in the financial statement. It'll tell you what they expect to receive. They haven't received the cash obviously yet, but what they expect to receive. So when you're doing an assessment of their liquidity and cash flow, that is an important number to obviously take a look at. In addition to the financial statements that are here, this is organized in a liquidity order. So current assets mean those assets that we expect to convert or be able to convert into cash within the next year. That is an important number when you're looking at it and assessing the financial statement. So anything current is set up that way. Anything in current liabilities is a debt or a liability that is due in the next year. So again, a very important number to take a look at. And then each after that, it goes in order of liquidity, essentially, and you'll get the financials. But all in all, I think looking at it, if I'm sitting in your shoes, those are the important things. What are they going to get? What do they have? How much do they have sitting in investments? What is their net asset position, which is the bottom arrow? So how much do we have that's available to spend on operations without donor restrictions? And then how much is tied up of our net assets with donor restrictions, and what is it tied up for? So those are the unique items about it. We could probably spend, an entire day going through each of these line items, but really just getting to know the financial statements and understanding those are some key components when you're evaluating to take a look at. If I'm you and I'm evaluating a not-for-profit as a grant maker, here's some of the things that we really thought, Matt and I got together and said, gosh, what would we watch out for when we're looking at a not-for-profit and really thinking about an increased literacy and understanding of the financial statements and what story are they telling? So when I look at a statement of financial position, it simply shows the assets, the cash and investments and property we own, the debt that we owe, and then kind of the resulting position that we have and the money's left over. The things I want to watch out for is how much is in related party. Do we have a lot of receivables from related parties? Are there restricted cash positions for some reason? So, and when I'm evaluating their health, is something tied up and they're not going to be able to use it in operations? Do they have stale contributions receivable? Is there an overinflated financial statement? So in other words, this is a risk we see, is people putting generously contributions receivable to make their financial statements look healthier than they are. And are there old receivables not coming in? Is there a lack of change? Are they not recording allowances for some of those items, so diluting them? Also, when you're looking at it, you want to see Great that they have investments. The best place to be, especially as a not-for-profit organization, is to have access to some liquid investments. If we have investments tied up in anything like a joint venture or irredeemable investments, that's something you should definitely pay attention to and understand, because those assets aren't going to be available for them to fund their day-to-day operations. So it's important to know the excess prepaid, what are they parking there to kind of manipulate maybe some of their numbers. And we have some other things in here. I think some things really to point out is, if I see a line of credit that is maxed out, that gives me concerns. That means we're funding our operations through debt. That's a red flag. If we're having to finance our leases through debt, something to pay attention to. If we're only able to get debt with balloon payments at the end of it, that's something to really pay attention to. Without donor restriction deficits, that's a concern that we always have. Are they operating in the red so much so that they've put themselves into a deficit position? And then there is a liquidity disclosure that accompanies these financial statements that I think is really important. You can find it. It is required under the audit standards and ASC 958, the accounting standards. And it does go through what is available to be spent in the next year specifically. It's a great disclosure to take a look at.
Hey, Melissa, just before you move on, I was thinking, one of the questions we often get from board members is they look at that net asset line, especially the unrestricted portion, right? And they ask, well, is that how much money we have available that we can start spending for other things? And it's so important that you're looking at the context of the greater all, because a lot of that, even unrestricted portion, could be really your property and equipment, something that's not going to be liquid and it's really available forever or a long time. So it's always important to even think about, break that down, the unrestricted portion of where is that tied up in. And then secondly, with the receivables, and you mentioned sort of, what are those that have been collected? When we start seeing pledges that are, more than 5 years old, 10 years out, for example, just the likelihood of collection becomes more uncertain. So I just always want to let people know there is a footnote disclosure that breaks out, when are those receivables expected to be received? And if you see a really large portion of it beyond 5 years, I would definitely question that and have some conversations with the organization before you make a grant.
Absolutely. No, that's a great point. So moving on to the statement of activities, specifically revenue, we see, Matt covered this. I won't cover it too much. It's mostly contributions and grants that we see, or fee for service if they're doing some sort of programming for that specifically. Universities have obviously tuition. Some child programs have obviously some fee for service. Other types are interest income, realized gains and losses. For all of these revenue types, most of these can be restricted by the donor in one way or form or another. The fees for service are never restricted by the donors. Those are generally unrestricted because there is something of exchange that is going there. So just something to keep in mind. The type of support and revenues we see, I'm not going to speak through each of these. You can see them on the slides, although I think somebody lost some of their slides, so maybe I will quickly go through. Membership and program fees, government grants and ticket sales, obviously for performing arts or other entry fees, investment income in kind, donations and contributions. That's the typical support we see as it relates to any of these, and really understanding those that are contributions like the in-kind donations, contributions to investment income, or even sometimes membership dues can be restricted by the donor. So be careful and pay attention to some of those and see what you can and can't use. Not-for-profit accounting, so the statement of activities, or your income statement, if you're familiar with the commercial side, is the financial statement that does go through, obviously, the revenue less expenses. On the expense side, a not-for-profit generally accepted accounting principles requires a not-for-profit organization to present their expenses in functional categories. So telling the users of the financial statement, how much do we spend on program? How much do we spend on overhead? How much do we spend on fundraising and membership development, if that is the case? You are also required now under the not-for-profit accounting standards to present them in natural categories. So what is salaries? What is rent? What is expenditures in natural classification? So you'll be able to find both of those in the financial statements or the footnotes to the financial statements. It's really important, and we'll talk about this at the end of some of the takeaway with the ratios. This is an area susceptible to manipulation because there is an incentive to have a higher percentage for a program. It looks better for rating agencies. It looks better for folks like you who are evaluating grants and grant making. We always want to see them spending most of their money on programs. And so I think it's definitely an area to pay particular attention to and the classifications and the manipulation on that. So this is what the statement of activities looks like when you go through it. So the top section is the revenue. Most, as you can see in here, for the American Red Cross relates to contributions. That's how they're primarily funded. Their biomedical or their blood services is their fee-for-service piece of that. So they do have a bit of exchange in here. And as you can see, those services are not with donor restrictions. So again, statement of activities is required to be presented on what are we bringing in and expending without donor restrictions, what are we bringing in that has donor restrictions, how much of those donor restrictions are we using in each year, and what's left over essentially that we're holding on to for future years. So you can see that the release from restrictions is just that. So what was restricted before that we spent. You can see the operating expenses are categorized by those functional categories that I just covered. So what are the programs? And you can see each of their programs and what they're spending on it. What are they spending on fundraising and what are they spending on overhead? And that's all without donor restrictions because we've already spent it. So therefore we've released the restriction. You can't see me, I'm doing air quotes. We released the restriction. And then there's some non-operating items in there. But I think those are the most important things. At the end, which is unique to a not-for-profit, there was a reconciliation of the change in net assets or the profit or loss for the organization for the entire year is there, and it goes through kind of the ending equity or net asset position. So what to watch out for in the statement of activities. If I'm you and I'm doing grant making, I would be very concerned about some revenue concentration. So whether it is a single source that is giving them money, so a donor that is funding most of their operations, or if it's a particular agency, so say it's LA County is giving them most of it. They have one particular grant that they're getting. And it's not, I'm not trying to scare you away from organizations like that. I just think it's an important note that if you're highly dependent on one source of income and that one source of income goes away, the not-for-profit organization is at risk, right? And so I think it's important to understand that, especially when you're giving a multi-year grant. It's also important to understand if there's conditional contributions because that could or could not be received if we do or don't meet those conditions. So it's not a sure thing, so paying attention to that. Paying attention to the revenue restrictions. You may be getting lots of revenue in, but there's so many restrictions that we may or may not be able to spend those. So understanding their need for funding of unrestricted, certain reclassifications. We've talked about some negative operating results. I think pay attention. I'm not always worried if a not-for-profit is operating at a deficit, but if they continue to operate at a deficit without a subsidy of contributions, it does become an issue and something to definitely watch out for. Continued negative positions, restatements. So that to me shows that either their competency as it relates to accounting may be, weak, or they've missed something, or maybe they just don't have everything there. Negative changes in net assets we talked about, or releases to perpetual restrictions. I bring this up because there really should never be releases to perpetual restrictions. So endowments should stay forever. And if you see use of endowments, it's usually a red flag that they're having to use some of those to fund, which really is a no-no and is against the Uniform Prudent Institutional Funds Management Act. And so it's something to pay particular attention to. I think the question came in, and it's something I think is important that I said earlier, is to watch out for without donor restriction deficits. That's what I meant to say. I'm not sure if I said donor, but that to me shows that you're operating at a negative amount, that you are generating negative. You used all of the money you could use on operations and then some, and probably are borrowing from donor restrictions, which is a red flag. So if you see that on the face of the statement of financial position, that is something to pay particular attention to. I'm going to cover just real quickly the statement of functional expenses. This is required to be presented, whether it's a statement itself or it's in the footnotes. This goes through the programs and the natural classification, so you can see it disaggregated in this matrix and give a little bit more glimpse and transparency into it, more just for you to understand that it's there, it's required to exist, and it gives you greater transparency as somebody evaluating a not-for-profit organization. We talked about this, watch out for in the statement of functional expenses, manipulation of allocations, right? If you see big fluctuations or it looks too good to be true, ask questions about it. I think, we hear folks like that 90-10, 90-10 or 95-5 or 80-10-10. Folks want to see, and rating agencies love to see anything 80-85% and above spent on program, and then obviously overhead minimized. So there is obviously that inherent motivation for organizations to have that and to pay attention. Pay attention to the allocation of administrative items into program, legal, taxes, other items that it just doesn't make sense to be supporting a program. Maybe they're manipulating with that and fluctuations year to year. Real quickly, I'm just going to cover the statement of cash flows briefly. It is an important financial statement. I think not a lot of people quite understand it, but it is something to pay particular attention. And if I'm you and I'm evaluating a not-for-profit, I think those things that are really important are, what are we generating from operating? Are we generating positive cash from operating? Are we having to finance to have cash? Are we having to sell investments to have cash? And so if I'm you, what I would just understand and take away from this literacy program is understanding the three categories and understanding, I think the most important one to me is I hone in on the net cash used from operating. So are we able in our operations to generate cash, or are we using cash? And this, as you can see, the American Red Cross year after year is using cash. They are not generating cash from operations. And what that means is they're having to either sell investments to fund operations or borrow to fund operations and to have a positive cash. And so that is really those three categories that I pay attention to when I look at this, to really understand the health of an organization and how it's running. And for you who may need funding, right? They may not be able to do it, and we need to subsidize it through some of the grants that you are making. And on the statement of cash flows, just what to watch out for is negative change in net assets, which we've already discussed, but I think a trend, not 1 year, but a trend without subsidies, a trend in negative operating cash flow, again, not a 1 year, a 2 year, a trend, 3 to 4 years of that. Excessive reconciling or netting items that feels like they're burying something, there's something they're not disclosing, and just something to really pay particular attention to. So Matt, I'm going to hand it back over to you to go through some of the tax exempt. I know we have so much we're fitting into here, so we'll click through this and then go through the ratios at the end.
Perfect. Yes. All right. So before we dive in, we have one more polling question. Actually, we have two more. One more after this one. But what part of the 990 do you go to first, if you go to it all, when you're trying to learn about a new entity, and really just make sure it's correct? Or if you are sitting on the board of a not-for-profit, what do you look for just to make sure it's correctly being reported for your own organization? So part one, because it gives you a good snapshot of the overall activity for the year, and information like, of course, number of employees, volunteers, that sort of thing. You go to Schedule O. There's a lot of great information in Schedule O that really gives some insight into what the organization accomplished that year and explain, more about the mission and activities. You go to Part 7, where it talks about some of the compensation and key officers that are involved with that entity. Something different that's also more important, or do you just avoid looking at 990s at all costs? I know. I guess I'll start by saying that neither me or Melissa are 990 preparers on our own. Generally, we do have a number of experts. So if there's questions that come up that you might have that we don't cover today, please put them in the chat and we can respond and make sure we get them answered. But it looks like most people say that it gives us Part 1. So that very first page of the 990, because it gives you a good snapshot of the activity for the year. And I would agree, it's a best place to start. I think that's why, obviously, the IRS has placed it in that format as well. So before we really dive into 990, I just want to talk about some other annual compliance that is required by other, either the IRS itself or other agencies. So of course we already know that in addition to 990, payroll taxes is something that every organization needs to pay, and there's a separate reporting done by that, as well as when you're issuing 1099s and other tax forms to foreign contractors and independent contractors. But in addition to that, a not-for-profit has to do, for example, state solicitation. So a number of nonprofits, especially those that operate in multiple states, have to go through this process annually where they are getting approval and reporting to the states, what their activity has been during the year as far as soliciting donations. And that can be pretty time-consuming, and there's not a lot of firms or organizations out there that specialize in this. And so, we often see organizations getting behind in this reporting and sometimes can fall out of compliance and need to go back to the state to sort of do some catch-up reporting so they don't lose their exemption status within that location. And then, of course, retirement benefit plan compliance, which we know is required by the DOL in partnership with the IRS, and so there's obviously separate either audits or forms that are filed annually related to those activities. So diving into the 990, it really is an informational return. That was how it was established. If your organization does generate unrelated business income tax, there is a 990T, which is a supplement return that really highlights those activities and will either generate the amount of tax that needs to be paid or potentially a net operating loss that will carry over to future years, which can benefit the not-for-profit so that it does not generate taxable income. The document, again, really dives deep into compliance. There are a number of sections that are very driven by checklists. Do you have this policy? Do you have this procedure? Yes or no? And really the IRS uses that to, first of all, target, potentially those entities that are struggling, right? Are there some improvement areas that can be made to help with the governance? But also gives the user of the financial statements better insight as well. So when you are working with organizations that you might be granting to, I think it's important that you review those checklists and really see how strong are some of their governance practices, and are they reviewing the 990, for example, as a board before it's being issued, and are there other conflict of interest policies that are potentially missing that would be important to you, and sort of maybe asking some additional questions about. Of course, the 990 is available for public inspection, and so it becomes this, PR document for a lot of entities. And so we want to make sure that it sets the right tone and really gives the right meaningful information. So, for example, financial statements that we've just went over, there's a construct to it, right? There's really limitations on really what you can dive into, because if an auditor is giving an opinion related to those footnotes, there's not really an MD&A that you would see like for a public company. But in a 990 form, there's a lot more flexibility, especially in that Schedule O that I mentioned during the polling question, that you can give additional insights about, what you as an organization have specifically been accomplishing that year. And again, although most foreign financial statements are available upon request or might be posted on some other websites depending on government regulations, the Form 990 is really sometimes the only role that members of the public can get their hands on to understand about that organization. So, similar to what we talked about from a financial statement standpoint, the use of the Form 990 can really be anyone, because again, they are so public, and obviously the government looks at them, the IRS, donors, but as Melissa mentioned, charity watchdogs, really, spend a lot of time just making sure that that those percentages are correct, that they have, appropriate measures in place related to conflicts of interest, to related parties. And then we often see, right, those organizations that for something's gone wrong, a news agency or reporter digs into what's reported in 990, and again, it becomes a PR nightmare if there are inconsistencies between what are reported in an annual report or on their website and what they actually end up seeing within the 990 itself. So as you can see in 990, the core form is only 12 pages, but there are so many schedules that accompany it. Now, many organizations obviously would not have all of these characteristics. For example, generally only those operating a school would have a Schedule E, or only hospitals would have a Schedule H. But there are a lot of other forms that can come into play, and we're going to talk a little bit more about Schedule C and Schedule L. And and Schedule R. But I want to talk a little bit about Schedule B real quickly, because that is the schedule that is often not in a public document. So those are those donors, right, that are over $5,000, and it's been contested recently within Supreme Court, where certain states, the Attorney Generals wanted to make that information more public, at least to them, so that they have an understanding of, are there potential conflicts of interest, are there, risks of influence related to some of these donors. But we did see that response from the Supreme Court saying that no, that is a privately supported document. Really, that is because of that's the intangible asset for the organization, right? They don't want other organizations to get a hold of that list potentially and then start targeting those donors for their own benefit, or reaching out to say, hey, this organization does a better job over here. So that really is meant for just the IRS and, again, the management of the entity. Schedule N, I guess, dissolution, really that would be the last time that the 990 probably would have that form, is really communicating that there's been either they've gone out of business or maybe they've relinquished their assets to another not-for-profit organization. And then Schedule J has some compensation details, which we'll talk over. All right. So I mentioned a little bit earlier about the 990T. So just real briefly, what that form requires. So again, if there is a trade or business type activity of the not-for-profit, this will be covered within that schedule. And there's a number of attachments that talk about, whether there's any lobbying penalties or business income that might have been fraudulent or from foreign operations. So definitely another critical document, but not always available necessarily. So we thought we'd just take a quick look at the 990. We picked the NRA not really for any political reason, just because they've had some forms that are unique that we don't always see every day, and since they are been a highly public organization, just thought we would chat briefly upon them. But as you can see here on that first page, that snapshot I mentioned earlier, it gives a general overview of, again, the number of employees. And what I think is really fascinating is the number of volunteers they have, 150,000, compared to the total number of actual employees, 770. That's rare. It's unusual. We don't always see organizations with that quite a bit discrepancy between basically paid employees versus volunteers. Again, it gives you an understanding of their overall current year activities or prior years. So, obviously continue to have losses in the last year of this report compared to the previous year. But it also tells you what type of organization they are. So at the very top, it says they're a 501c4. So again, that means that they're not a public charity, right? They are an association. And that's another, again, key place to go right away to understand, okay, what type of entity what I might be contributing to or be working with for some other purpose like a grant. Let's see here. Part 7 goes into the compensation and hours of key employees. One area that we often see errors in reporting has to do with the second line under each employee. And so that are the number of hours that employee or officer might be working for a related organization. So for example, a foundation or another organization that might be closely tied through a control. And so that way all hours are captured between all those different legal entities. Again, the top 5 compensated employees are listed here as well. Again, the NRA specifically had, some eyes on them for just the dollar amount that was coming into being for some of their top paid employees. And we really are seeing, especially as nonprofits become more complex and more integrated with different business lines, we are seeing more highly compensated employees. I don't think that that's necessarily a red flag, but it's an important benchmark to talk to those different organizations. How are they going to continue to fund those salaries if you, for example, have a concentration of revenue like Melissa said earlier? And then Schedule C has to do with lobbying and political activity. So again, as a 501c4 organization, this is to be expected. Many 501c3 organizations, although they're restricted from, lobbying, there might be some areas that are, we know many organizations would fund certain activities, for example, like a conference that then itself might go on to perform political activities. And that's okay to some extent, and it would be expected. And so really it's important that the 990 highlight, what are those relationships that, if they're kind of crossing that boundary, then obviously the IRS wants to know so that they can say, hey, are you really classified correctly? It should be a separate arm created of this organization that would file under a separate, either a 501c status, and so on.
Hey,
Schedule
Matt,
L
we've got
talks about.
Hey, Matt, we've got about
Yes.
5 more minutes left, so I'm thinking let's just hit a couple of
Sure.
these
Yes.
high-level ones and get to the polling and then ratios, okay?
Perfect. I just want to chat really briefly about excess benefit transactions because, again, this would be something that you would not expect to see. Typically, this is a huge red flag for the IRS and would pretty much require an audit. And so any excess benefit transaction would be compensation really above what we consider fair value. And so that was pretty unique from the NRA. But, again, if you're seeing that with any of your organizations, I would definitely have some questions, definitely potentially speaks to some red flags. All right, I'm going to push this out. Lastly, again, very similar to what Melissa mentioned earlier on the 990s, some of the things to be looking out for would be related parties, any underwater endowment reporting, and some concentrations in contractors. All right, Melissa, you want to talk a little briefly about ratios?
Yeah, so we just wanted to leave you. I think this is so important for you to understand the ratios that are out there. There are 2 rating agencies that really go through and evaluate not-for-profits for charity, Navigator and GuideStar, which is now Candid, that goes through the ratios. These, what I will say is that we've included the ratios they look at. They are included on their website, and you can obviously get these slides and take a look at it at your own leisure. What I really wanted to point out was these are really important to understand the health of a not-for-profit organization, the viability of a not-for-profit organization, and the sustainability of a not-for-profit organization. So when you're going through your grant making and you have your dashboard or your evaluation or your checklist when you're going through your due diligence and who you're granting to or who you're considering or even reevaluating with a long-term grant, I would highly recommend considering weaving into these ratios into some of this to really get some of the indicators that might be important. I'll just quickly cover some of them. The AP aging indicator that GuideStar or Candid has really goes through how long are they holding onto their bills and not paying it. So that's really indicative of a liquidity issue if they're not able to pay their bills, and this ratio is a negative ratio or a not a positive ratio, I should say. That's something to take a look at. Contributions versus total revenue, that is really just how dependent they are on contributions or how dependent they are on other revenue, just an indicator there. The debt ratio is really how much do they owe versus their total assets. You want to make sure that they don't owe more than they have, obviously, in assets, which will put you at a deficit position and really be highly leveraged. So it helps you really understand that. The fundraising ratio, which I'll cover here in a minute too. The liquidity indicator, I think, is fantastic. It really does show you what liquid assets they have out there. And then some of the other ratios. I'll quickly move on to the Navigator ratios, which are pretty similar. I think those that I do like to look at as it relates to some of the fundraising efficiency is how much are they spending in fundraising to get contributions back. That's really indicative of are they spending in the right places? Are they spending too much on fundraising? So, is it costing them $1 to get $1 in? Or is it a different ratio than that? So I just wanted you to have these, understand that I think they're really important. One of them that I clipped through was the saving ratio. What are they able to basically save each and every year? Do they have a positive change in net assets, and are they able to keep that too? So that really is some things we wanted to do, and we'll just follow up real quickly with a polling question. I know that was a lot of information and probably could have been spread over an entire day, but we really wanted to get some nuggets out to you to increase some literacy and identify red flags. So how do you feel after we went through this? Do you feel a little bit more comfortable, much more comfortable, or I don't know what just happened in this information? And this might be something where, definitely, Cameron, we might want to do a follow-up on this because there's so much to know and such a deeper dive to take into the 990 and some of the footnote disclosures as well. But we really are happy to go through this today. Okay, perfect. That's good. So most of you got something out of this, which is fantastic, and that's really what we wanted to see. We don't have time for the Q&A, so I will, I think we've actually answered most of the questions as we've gone through. So I will just say, hand it back to Danielle to do some closeout questions, but really am grateful for you joining us today. Thank you for listening to us accounting nerds go through some accounting on not-for-profit organizations, and absolutely delighted to support SCG and Northern California grantmakers in their mission. So Danielle, I'll let you close out.
Great. Thank you, Matt and Melissa, for a great presentation today. For additional SCG and NCG events, please visit their websites. Unfortunately, we are out of time. If you submitted a question that we did not get to, we will do our best to follow up with you after the webcast, or you may reach out to the presenters directly. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks should you have any difficulty downloading it now. Finally, here's a link to an online survey where you can provide for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you for joining us. We hope you'll join us again next time.
Thank you, everybody.